Lunar New Year again. Now we will start our session today, and to start, let me remind you something. Last week, I mentioned to you that I will prepare kind of a practice question for you for the upcoming in-course exam. And the in-course exam will be in 2 weeks, right? So next week will be the last part that I cover. And after that, in the following week, you will have a test. And in the following week, you also have a session about consolidated all the session that from that you will work with Gabrielle, but that in 2 weeks. So next week you still we will still see each other. So here is the model page of the course, and as you can see in this part, I prepare the supplementary questions, and here is examples of MCQ test question, and I set it 45 minutes. Okay, so please have a look at this, and it's exactly kind of the difficulties or something is will very similar to your kind of the level quite similar to your in-course exam questions. So please have a look at this, and I also let the time the attempts allowed is unlimited, so you can do you can practice many times and try to see for the first time how long will it take you. But the time will be 45 minutes. Okay, and I will need to contact the learning teaching administrative teams to see how long will you have grace period. If you have a grace period, it means normally for the in-course exam, we expect that you will have some time to upload the questions or some time for you to download questions. However, with the MCQ test, everything is online already, so you don't need to download. Therefore, I'm not sure whether you will have some extra time or not. So therefore, in this exam, in this sample example, you have time limit 45. Okay, and at the moment only one attempt, so please one attempt, so it means that only one try. And to prepare for your in-course exam, please try it, have a look at it, and I hope that when you prepare it, the number will increase. So let me so I will try with my account here, and you can see he marked out when you have the result. Okay, when is the in-course exam? I mentioned the in-course exam. The in-course exam will be on the 26th. Okay, on the 26th of February. And you can see here the mark out 3 marks, right? So it means that is the easy question, and time left at the end here, you will have 25 questions. Okay, you have 25 questions, 10 easy, and you will see when you click one here, it should be easy, right? Which one we will do it later, but I mean that from number 1 to 10 here easy, and when you click to 11 here, so it starts to moderate level, and moderate level here you got 4 marks for 10 questions. So in total you have 70 marks for your final for your easy and for your moderate level. And then from question 21 after that no, still moderate, 21, sorry. From 21, you can see in here his heart level mentioned here for you, and it was 6 questions, each 6 marks each, and here is an example of the heart level. So you still have 2 weeks from now until time you have in-course exam. So please, if possible, please arrange your time from this week until the next session. Try on the questions here and ask me if you have any questions so far with this you find that it's challenging to do or something. Okay, so and please remember, under the pressure you have 45 minutes to do it only. Okay, so that's why I want to let you know. But just the question at the heart level is challenging. For example, like this, you can see when look at this, it's hard. Okay, it's hard. When we say it's hard, but sometimes try to spend time to do it. Okay, it's very comparable with your the last one for your in-course exam. So if you have any questions, please feel free to ask me. Okay, so I can help you next week. But and the following week is motor new unit, and also you have the exam already. So please practice and ask me. Okay, or even just email me or somehow. Please feel free to do it. So you can see we can we can have a look at that next week once you prepared. Okay, so stop here. So he is still improve. Yeah, that's my account. But for your account, please, in unit 1, as I mentioned to you, all knowledge cover unit 1. Therefore, in here again, in unit 1 here, supplementary questions is a part for you to practice, or somehow I can claim that is a mock exam for you. As the test bank for we submitted the test bank with 50 questions, and in here you have 25 questions only. So somehow, of course, it's not the same or similar to your in-course exam, but the level is comparable. Some questions, as I mentioned to you, for example, like depreciation, or for example, last in first out weighted average cost, they are a very common knowledge of this course, right? So somehow for sure that you will see it, but the number change. So practice it. Okay. So do you have any questions? The in-course exam will weight 20% of your final mark. So therefore, spend time to practice. Hey, any knowledge that you don't know, you can please feel free. Please feel free to ask me, review that, like kind of review that knowledge in the next session. Anything that you want to ask me. Okay. You can do this, and again, you can do this test multiple times. This unlimited. So you can do one, and then you can redo it. You can just redo. Like you practice. Okay, so you practice like for the first time with a certain knowledge at the moment. You test it and whether you can finish in 45 minutes or not. But the window 45 minutes, and then after that it's automatic close. So it's very similar to your in-course exam. Okay, but different from your in-course exam is that you can do many times. You finish, you can redo it. Finish, and you can redo it multiple attempts. But for your final exam is not multiple attempts. But for your in-course exam, you have 24 hours window to finish. It means that it's open. I will need to check again the open time. But the open time, for example, like because we know that maybe some like can be that some of you is not in the UK at the moment, so different in time zones. So we open 24 hours for you. You can start to click, and then after that 45 minutes is closed. However, you can start anytime within 24 windows. Okay, So don't be afraid about the time. That sometimes that you feel like, oh, it's late in the evening. I can't stay at that time to work efficiently. So you can work in the morning. Sorry that it will be Saturday morning for your time. But it's okay as long as you finish what thing 24 windows. So I think I will check again and let you know when it starts. It can be 9 a.m. in the UK time, or it can be 2 p.m. in the UK time. Okay, so we will try to open the window. What's the most efficient time scale for you? But remember, it's 45 minutes. Okay, and try to practice again. As I mentioned, that in Unit 1, in the supplementary questions, so try it. Okay, so and again, next week will be my last session. So I will, but in that session, we'll cover cash flows. So cash flow is important knowledge for your exam. Or in general, Unit 2 and Unit 3 will that will be in your exam. So can be in your exam, you can have for Unit 2, either you have a balance sheet question, prepare balance sheet income statement, or you have another question about cash flow. Therefore, next week is also important knowledge for your exam. Okay, and your exam will be 60% but open. And until now, so far, 90 to 99% confirm that you will have 2 questions. Okay, so you will have 2 questions in 90 minutes. You have a lot of time for 90 minutes, and you have extra time to upload and download. Therefore, I don't think that the exam will be very challenging as long as understand you need to about preparing financial statement and cash flow. The interpretation today, what we will mention is about your coursework. Okay, and the next week, the knowledge from next week in unit in the following week when Gabriel teach you is another question in your exam. Okay, so that about the assessment. Unit 1 will be your in-course exam. This unit, the interpretation, now we will mention that will be your coursework. Okay, so before we go to this statement analysis, do you have any question? Sorry, do you have any questions about your? So please feel free to ask me. Do you have any questions about? You can ask me about for example, the in-course exam, or you ask me about your group work. Okay, so if you don't have any questions, please, I will. Okay, when will we have the final degree exam? Your final degree exam will be in April, or maybe end of April or the beginning of May. I don't know. I can't answer a question about the time schedule, but I know the period that will be in April or May, or at the beginning of May for you. Okay. So the deadline for your coursework will be on the 24th of March, right? Your in-course exam will be in 2 weeks. This will be on the 26th of February. So from now until the end of the course, the assessment more before it's quite light, but from now it's a lot. So please spend time to learn. Do we have the same questions in course exam? No, it can't be the same question because it should be it's similar. some of them are similar, but not the same because, yeah, as the exam, it can be the same, right? However, some question, for example, as I mentioned, for example, like first in, first out, last out, depreciation, or some question at the heart level is very, very similar. So just spend time to understand that. Okay, so similar, it means that maybe number can change or some figure or information change, but the way approach is similar. The easy question, I don't think the easy question are the same, okay, but similar in the sense that you can see the level, because if you try the in-course exam, no, the mock exam or the supplementary questions, you can see that the what the easy level mainly focus on theoretical part. Therefore, the easy or kind of all easy question is about theoretical part. For example, like something about, for example, like we know, I can ask like what are for enhancing qualitative characteristic of financial report, for example, like that. And then you just need to mention inside. But because the bank takes 50 questions, I don't remember. Okay, but similar. Therefore, please feel free to ask me any questions about the mock exam. Why it's like this? Why like that? Why I answer this, but it's not like this? So your chance to ask me is next week. After next week, I will not be with you to answer. Okay, but you still can email to me until before you take the exam. Okay. I will reply all the email about in-course exam, that why this, why that, until Thursday, the 25th of February. But on the 26th, I will not answer because that's the day for you for the exam. Okay, so please learn, have any question, feel free to drop me email or ask me next week. From now to the 25th, before 1 day before your in-course exam. Okay. So now we will that about the in-course exam. Now about the coursework. The coursework on Moodle, I posted already. That is the coursework guidance, and in the coursework guidance, I very clear here for you. So please have a look at that. Okay, and suggest here we also have suggested format. What do you need to cover? And now in the content page, you will need to have all that. Now look at the main section. So it's different from the report of your statement analysis and financial statement analysis and valuation or equity evaluation, something that course. In this course, again, we ask you a very clear point about one company analyzed in a normal way. So section 3.1 here, you will need to analyze the performance analysis, what cover profitability, assets utilization, short-term liquidity, long-term solvency, and investor ratios. Okay, we need to cover 5 parts, different from the other course. And then in section 3.2, we ask you corporate governance issues, which you will study in unit 4 about non-financial information. In section 3.1 is about financial information. Section 3.2 about corporate governance. issue 3.3 about corporate social responsibility. So 3.2 and 3.3 about non-financial information. Please have a look at that. And now in this session, we will cover 3.1. Okay. And in 3.1, we cover 5 financial ratio. Okay. And to understand this financial ratio, sorry. From this slide 26, please have a look at on your Moodle. We will, for the ratio and for the 3.1, remember use common sign analysis and ratio analysis only. Okay, so look at common sign analysis and ratio analysis, and then in the common sign analysis, analyzing the common sign of statement financial position and common sign statement of profit or loss. And here is an example when we construct the common sign based on the statement of financial position, and the common sign on statement of financial position we will scale based on the total assets here, right? Or in here we will scale by total equity and liability, but in the total assets here we just take each and divide by the total, and then we have the fraction of common sign. So we can see how about tangible assets, how many percentage of total assets in the no tangible assets in the total assets. So in here we know the fraction, the structure, right? The structure of non-current assets and current assets in total in the total assets, and that's what we need to analyze. And the common sign here, the common sign when we look at this, what's the common sign financial position, we also can see the financial structure of firms. And what financial structure of firm here, we can see that 72.7% form total equity, and the rest form the liabilities, right? So that's the general common sign when we analyze common sign statement of financial position. And what's the common sign of income statement? Here is we will use sales, right? Sale is the percentage, the base, and then we will analyze how the base compare to how the other compare to the rest. For example, we will take the profit here from the sales here. We know that from sale in total, the profit after the profit for the period account 14.1% of from the total sale. That is the way we look at common sign, right? Or and one more point, you can see like gross profit in here. Remember, gross profit in here will be scaled based on the sales here, right? And so 51.4% gross profit from sale, and the cost of sale here is the difference between the sales and the gross profit. So therefore, in here we will take we can see the firm in here. The cost of sale is relatively comparable with the gross profit, right? That's the common sign. Common sign, with the vertical sign here is we will scale by the base. Beside the base, we scale vertical. We also scale through the time that the horizontal, but I just so use the common sign here. And we use the financial ratios. Please, in here is just slide, but I think that it will be more useful for you to read the book on Moodle of this course. For every section, you have book, and in the book is more information. Okay, you have more information. You will have more information about that on for example, for each ratio I mentioned, the positive, the negative, two sides, sometimes a number too high, what does it mean? But another way is, so please read the book. I believe that the book is helpful. Well, lots of information for you in that is more information than slide. Slide prepare for you in case you want is more friendly reader. However, I can't write too long in the slide for you because it's kind of for each slide it cannot be too long. So therefore, please read the book. I suggest that. So I have a question. Is there any website for us to find average or, or percentage in a specific industry sector to compare with which company we focus? You can use, you know, in the financial statement analysis and valuation or equity valuation, ACFIN 5200 course. In that, we have the Thomson Reuters. I'm sure that all of you are doing this course because that's a compulsory one for all of you, right? So in that course, you have the Thomson Reuters website, and you can log into that Thomson Reuters website using the remote desktop. And when you use remote desktop, what the account and number you log in, you find company, and then they will have industry information for you. That's a source for you if you want to use the available information, okay, from Thomson Reuters in that website. However, in this course, right, we ask you more about the company itself, but you can use the industry to compare. It's very nice to read how you compare the firm with the industry, but we don't ask you to do for the what the competitors. So you don't need to do what the competitors, okay? But if you want to do what the competitors, it can be okay. It's yeah. Um, Okay, but in this course, we focus on the ratio itself. So you need to write in different parts about the ratio with different ratios. So that's the first thing where you can find on Thomson Reuters, Thomson One Reuters on the page or on that page. We provided you in the other course. However, in this course, it's not that our aim. Therefore, we don't provide that for you in this course. Okay, but as you asked me where we can find, another way for you to do it is you will pick up all firms in one industry and then you calculate by yourself. That's it. You can calculate by yourself. You can pick up 10 companies and then you calculate completely by yourself. That yourself, or you will use the source from Thomson Reuters, or also if you can access Bloomberg data, you can identify that as well. Okay, please feel free to drop me questions. So now we continue with ratio analysis. As I mentioned, the book on Moodle is very helpful for you to look at. Please have a look at that. But now I summarize. So in this course, you need to you need to compare what think the firms and through the time. But if you want to mention about industry, it's completely okay. It may help your writing better, more information. We completely fine with that. And in this financial ratio here, we split to internal ratios and external ratio. And external ratio that form investment activities. And investment activities, we will have earning per share, PE ratio, dividend yield, and dividend covers. So you can cover 4 numbers here. For the internal one, remember when you write the reports, you will have four parts, right? Profitability, assets utilization, short-term liquidity, long-term liquidity. So in total, you need to write five, at least 5 parts, but you can organize operating, financing, investment. It completely depends on you. When we look at the profitability, so you can look at gross operating margin, net operating margin ratio, or return on capital employed. Okay, here return on capital employed, not return on equity. Assets utilization, here we will look at the assets turnover, inventory turnover, or receivable turnovers, or ratios that relate to assets utilization here. For financing activity, short-term liquidity, that we will look at how whether firm will be able to deal with the short-term period, right? Or pay within 1 year. So we look at current assets, asset assets, and payables. And for long term, that's the way we look at financial structure. So financial structure, we will look at gearing, debt over equity, or we use interest coverage, right? So this course look at this traditional way from different part, because we hope that the knowledge from this course build for you the basic one, and for other course the applied one. Here is from the theory one, the base one for you. So before we move further, one part that we should know in this course or in this lesson is the part I recorded on Moodle. That is about working capital management. Although we don't require you to write it, but it's useful to know what is working capital, because working capital management will relate to the analysis about assets turnover management. And working capital management is we will look at working capital, and working capital is the difference between current assets and current liability, right? And the difference between current assets and current liability, why we look at this difference? We look at this difference because we want to make sure that in long term, the current assets is the money we need to pay in short term in 12 months period, right? So we want to make sure that we have current assets to cover current liability. Therefore, that about working capital management is about, and what inside the current liability here, that current liabilities is will be trade payables, right? Or any note payables, any about short term. And current assets, it can be cash, inventory, trade receivables. So a whole circle, it's all the whole circle in that and that about assets utilization. Okay, and we analyze a whole circle from we have cash, and then we have sales, we receive cash from sale activity. When will we receive that cash, and we use those cash to pay for trade payables, and we also use cash to buy inventory, or use inventory to generate sales, and then it's a whole circle. Okay, so we need to understand what is working capital. That the first part, the underlying, the kind of the fundamental part of the period part that I introduced to you. So working capital management relate to the way we kind of control or manage current assets and current liability to make sure that we have enough current assets to cover current liabilities. However, current assets should not be too much, right? Current assets, if it's too much, we have a lot of cash, or we have something in short term. But the money, what generate value for firms for long term, that is about from investment, right? So therefore we should use long term. We should invest more in long term, and as a result, we should not let cash free, because cash is cash. We should use cash to invest. That's the idea we know, right? We know that cash is king. However, we also know that we need to use cash to generate more, to invest more, and therefore working capital management is kind of the trade-off between holding enough cash to pay current assets, but keep cash at the minimum point to make sure that we use the rest to invest for long term. And that's the key point of working capital management. And therefore, it's also linked with assets utilization in working capital management. However, it's also linked with the short-term liquidity ratio here. Short-term liquidity is hold enough to hold, right? And now we look at further in more. We look at further. So if you have any question, please feel free to ask me. Okay, I will summarize very quickly for you to have to remind you again the whole idea about different ratios in this. So now we look at the profitability. The profitability in general is we see how we invest in one company, and then we can get return from that company, and it's tend to be highly industry specific. Okay. And therefore, a question about how we know about industry, yeah, it's a very useful question. And therefore, we need to compare what industry. In this course, profitability we learn is gross profit margin, net operating margin, and return on capital employed. If we mention about margin here, when we mention about margin, remember, we scale by sales. Okay, so if gross profit margin, we will use gross profit divided by sales in times with 100, and operating profit margin, we will use profit before interest and tax scale by sale. What does it mean about gross profit margin and operating profit margin? Again, it's kind of based on industry characteristic, but in general, we expect high, right? Because we want to see what we receive, what a company receive from their sales, because we scale by sales. So low margins, so poor performance. Okay. However, low margin may be set by management to increase the market share, because here we will base on we scale by sales, right? If sale, if we set net profit. Let me. Sale revenue here is from sale. Profit before interest and tax is net profit before interest and tax. And if we invest a lot in investment activities here, we borrow a lot, so we have high interest. And if we have high interest here, net profit before. So therefore, we need to consider all activities before that to make sure that all other about interest or taxes will not be affected by or not affect the net profit margin. Therefore, we look at the net profit margin here. It's very similar to the way we look at the return on assets. When we look at return on assets, we need to look at the net profit plus what the interest after tax, right? So that's about gross profit margin. But the most important point that we also look at is the profit on capital employed. The profit on capital employed, in this course, we look at capital employed. It means we look at equity and long-term debt. We not only consider equity only or shareholder equity only, but we also need to consider the debt holder. But debt holder in this case is long-term debt holder. And the return on capital employed that is so in is very somehow it's similar to return on assets, but it exclude the short-term debt, right? So they just focus on the long-term debt. And the meaning is because equity holder and debt holder are the one who invested in your firm, and they want to see how much a firm earns to return back for the permanent capital employed or the long-term investor. That's the meaning of that. Okay, and as I mentioned to you before about net working capital, right? Net working capital is the difference between all of this part, okay? All of this part is the current assets, and here is current liability. And net working capital is this part, that the part to make sure that it's cover enough all this part cover for any urgent situation, cover all this part, right? Cover current liability. And now when we look at capital employed is the point of equity and long-term debt here. Okay. So here is capital employed, and when we compare the capital employed here, we will use the different here. We make sure that we have different here. So we will invest in non-current assets, and we will make sure that we can invest something for equity and we invest something for long-term debt as well. So therefore, net working capital is the way we try to balance it. We don't we can use that to invest here too, right? However, if we hold this part too long, it means that we hold too much. It means that we hold the current assets is on this area. Okay, all of this area is the current assets. But if we hold too much, it means that we don't use it efficiently. So therefore, we try to keep it as minimum point to make sure that we can use current assets to cover current liability. And then the rest we can pay for. We can invest in equity and long-term debt. And therefore, when you analyze this ratio, where the current ratio, okay, the current ratio is the ratio of current assets over current liability. So the minimum point, the baseline is make sure that it should be at least 1, right? So make sure that current assets all cover current liability. But remember, if it's too high, it's too prudent, the working capital management maybe it's not very good. Okay, so therefore, we just try to keep its heads around 1 something, or can be 2. Okay, now back to here is about return on capital. Return on capital employed. Return on capital employed will be based on the net profit, right? And if we base on the net profit, we will need to look at from net profit and up. And when we look at from the net profit and up to the gross profit, and when we look at, now I mentioned from the bottom to the upper part, and when you look at from the bottom to the upper part until the gross profit, and back to this point when we analyze the gross profit in here. When you look at the gross profit, you know that gross profit is from sale minus cost of sales, and sale minus cost of sale. So here we have gross profit, right? And we scale gross profit by sale. We know the efficiency of control cost of sales. And over time, you can see that whether that firm they invested a lot in cost of sale or whether over time they reduce the cost of sale. If cost of sale like this, so it can be that the cost of the inventory is too high, and therefore we need to have certain negotiation, try to reduce the cost of sale to increase the efficiency of the gross profit. But it completely depends on industry, and we need to compare whether in the same industry gross profit is the same like that, or it's just the firm itself. Therefore, look at the industry to analyze as well. Okay. So that's the first point I want to mention about return on capital employed. Assets utilization, you will link with, again, as I mentioned, working capital management. And working capital management, in that we will look at assets turnover, inventory turnover, and receivables turnover. One point I want to mention is, in this course, we use, for example, like cost of sale divided by the average turnover. Here, but we use times per annual, or in here we use receivables turnover. Receivable turnover, we take receivable divided by sale times 365, and we use the number of days. We receivable, this is the trade receivable holding period. Okay, this the name is trade receivable holding period. However, we use in this course is trade receivable turnover. It's just the name, but actually the real name is the trade receivable holding period. Okay, and the formula of trade receivable turnover is only receivable divided by sales. Okay. So that's what I want to mention. Please look at the book on Moodle to have a look at this ratio and read this, and analyze trade receivables, inventories, turnover, or payable turnovers. It's all the circle to analyze assets utilization. And we also analyze short-term liquidity, in which we focus on payable turnover, current ratio, quick ratio, and asset stats ratio. Okay, and to analyze the long-term liquidity or long-term solvency, we will analyze debt equity over debt capital employed to see capital structure of a firm, to see whether the firm invests in debt or whether the firms invest in equity. And based on this number, we can suggest that whether a firm over time they use small debt or they use high debt. If they use small amount of debt, we should suggest that firms should increase their debt to get the benefit from tax shield, right? Because more debt, we have more tax shield. But if a firm have too high debt, so what we need to consider the issues, and the issue what high debt, and therefore we need to look at the interest coverage to see whether a firm is be or will be able to pay the interest, or how much interest cover in general. So therefore, the long-term solvency risk here, we look at gearing ratio or interest coverage ratio. Okay, so please have a look at the book to read further. And I summarize about this idea already for you. And finally, about investment ratio. For investment ratio, that's part is about, another name is valuation. We will look at earning per share, PE, dividend yield, and dividend coverage to see whether this firm how much this firm pay earnings. How about the ratio between price to earnings? There is a very important ratio to see the relative multiple, or to see the comparison, how much the price on the market they value compared to the real earnings at the moment. And dividend yield to see whether this firm at which stage, if they at the mature stage, normally dividend yield should be high, but if a firm at the growth stage, normally dividend yield is not as high as the mature stage, because they keep more earnings, they retain earnings to invest more in the future. So therefore, dividend yield help us to know whether firm have lots of investment activities in the future or not. If they pay too much dividend, it means that they don't have they don't have a lot of investment in the future. It can be a potential problem as well. However, if a firm don't pay dividend, they withhold a lot, but they don't have any investment activities, can create the corporate governance issues that you should hold, that a link for you to analyze the later step about corporate governance issue, right? Yeah, and when we analyze further insight, please have a look at that. So that's it about on the ratio we cover in this course. So we cover five groups, and remember to write the reports in 5 groups, and I introduced to you already. Okay, so do you have any questions? Perhaps at the moment, at this stage, you still save the coursework for doing it later. So please feel free to ask Gabrielle about this, because this also cover the next part. So please feel free to ask. Okay. Why is the calculation of profit different in ROE and ROA? If you have, okay, why the difference in, normally we can use the same. We can use the net income, and then we scale by equity. We have the return on equity, and we use net income scale by total assets. We have return on assets. That's the normal formula. You can use that. In this course, we use return on capital employed. It means that we use net income scale by equity plus what long-term debt holder, because we look at the long-term one, the money returned to the long-term one. Now back to the question, why is the calculation of profit different? The calculation of profit different actually to ROA and ROE is because ROA is the return we need to return for the one who invests in assets, right? So who are the one who invest in assets? They are equity holder and also debt holder. For equity holder, so that is equity, and debt holder is so the net income based on financial statement. Net income is we already deduct the interest, financial interest, right, or interest expense. So therefore, the interest is the one who already paid to the debt holder already. But if we just use the profit and we divide by the equity holder and we divide by debt holder, that is the total assets, is kind of not completely show how much they return to debt holder, right? Because net income is the final number, exclude the interest, but the denominator is include equity holder and debt holder. Therefore, when we calculate the return on assets, they normally suggest that you should calculate net income plus interest after tax, because you pay tax and then the interest after tax is the real interest you pay for the equity holder. That when we calculate the return on assets. However, it's still acceptable. It's still okay, completely fine if you use net income divided by assets. So it's completely depend on your choice whether you consider um, both equity holder and debt holder, or you just use own whatever. We can use the net income divide by the total one. However, what this point I also want to emphasize is remember to calculate the average number. Okay, either you can use in the numerator you can use profit, or you can use profit plus interest after tax. And again, interest after taxes you can consider for the one who for the debt holder. But in the denominator, so if the denominator you I suggest you to use the average number, because the average, the equity, the number on equity, right? That reflect the equity number is on the statement of financial position, and the statement of financial position is at one point in time, right? As at the end of the year. So therefore, if we take the average from at the beginning of the year and the holding at the year, somehow it's reflect for the whole year, and the profit is reflect for the whole year. Okay, so for the numerator, the profit is your choice. However, I suggest you to use the average for the denominator. Okay, is it clear why the calculation of profit is different? But okay, yeah, thank you. Do you have any questions? Please, I again, before we finish our session, remember to go to supplementary questions. At the end of unit 1, spend time 45 minutes for each times to practice. And if you don't understand anything, please feel free to no. If you have any questions, please feel free to email to me from now until the 25th of February. It means one day before your exam, because I will not answer on the exam day, because that when you already got the exam. So please feel free to email to me, or you can ask me next week in the live session. So I will explain during the live session for you. Okay. So hopefully that the mock MCQ test will be helpful, or the good preparation for you for the test in 2 weeks. Okay. And one more point is, sorry, I need to change the schedule again. Next week we will we will start at 12 as normal. So from next week you will back to normal from 12 p.m. So from next week until the end of the course, this will be 12 p.m. Okay, I will inform again on Moodle for you. Do you have any questions? Okay, seems like you don't have any questions. So thank you for joining the session today. Wishing you all the best for this new year. Okay, and I will see you next week at 1 p.m. Enjoy your week.